Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday morning market webcast. Okay, so daily chart, and you can see yesterday the bulls accomplished a great deal. They cleared the daily mid-band. They cleared the monthly pivot at 48. The 25.86 pre-FOMC price is open. We traded as high as 72 in the overnight. It was a whippy little open, but that rectified itself pretty quickly, and then we spent most of our day long. We were long 32, we were long 43, we were long 57.5. No, I'm sorry, we were short 57.5, short 58. So we were long. We had a couple shorts at the end of the day. We went out flat, got stopped out, and I'm flat this morning. So what I want to see happen here is I want to see, I wanted to see if it can hold monthly pivot. It was support here at the end of the day. Now you're starting to see the hourly mid-band become support. We're just kind of on this march higher. There's going to be news today. You've got the president making an address tonight. The China stuff is going to start to loom. But you feel as though in a vacuum, absent news, this market wants to continue to retrace. And it has a lot of room to retrace. We are now about 250 handles up off the lows. You've got the 86 pre-FOMC price. Then you've got round number 2600. And even when you hit 2600, you will still be 144 handles below the 200-day exponential moving average on the front month chart. So, that just gives you an idea of how far we came off. The fact that we still technically are in a bear market rally. This is a sustained bear market rally. We had seen little pops, and those little pops have been rejected to lower lows almost immediately. They would last a day or part of a day at most. What we're seeing now is you are seeing the first sustainable rally in this bear market tape. And it's going to tell us over the course of the next couple of weeks whether we're really in a bear market. If we are, this rally runs its course, and then over time we take out 2316. And at that point, you certainly see another leg down. If we're not really in a bear market, if the market just got upset because of the weight of everything or wanted to do this or wanted to do that, the tape can do whatever it wants. It doesn't care what we want or what we think or how we feel. Never does. If that's the case, then the daily mid-band is going to stay converted on any pullbacks. We're going to slowly grind up over the course of the next couple weeks to deal with that 200-day moving average, and we're going to get back up over the top of it. That's a lot. That's a big ask for the bulls. It's a big ask for the bulls. Not saying it couldn't happen. I mean, the bulls have ruled the last decade, right? But that's what's in front of us right now. So, as we head into the day, what's the deal? This hourly mid-band is the deal. Monthly pivot underneath that is the deal. 86 up above is the deal. Okay? And, kind of paying attention to the news flow. All right? Focus on the 5 or 10 handles in front of you. Understand when, like off the open yesterday, the first 5 or 10 handles is giving you some really violent whip. You're talking about 3, 5, 7 handle 1-minute candles. That's pretty nasty stuff. It's not rewarding anticipatory entries. And what I mean by that is, if we had VWAP in the area of 36 yesterday off the open. And even on the first couple of times before it went up, if you assumed that VWAP was going to hold as it came in, and I think the hourly mid-band at the time was around 34. If you assume things are going to hold at a certain area and you're laying out limit orders on that stuff, chances are, especially off the opens in this tape, it's going to run you through. And you're going to take a 5, 6, 7. I mean, we do 5-handle disaster stops in the room. So, for example, I was long 35, expecting support at the hourly mid-band. I didn't get it. It pushed down to 27. I take a -5. That was after taking a -3 on a short. So I opened the day -8. Ended up plus 27. But the volatility is still there, and it's pretty treacherous at times. So you got to be aware of the environment that you're trading in, okay? It's better off to sacrifice a couple few handles on the turn in order to get into an entry or get into a trade that is building higher lows or lower highs on a 1 minute chart where you can really define that risk. And then when it goes, you got to back away and let it work. So when we did get into the 32, we were up 14 almost immediately. And at that point, we took some profits, we backed away, and it turned into a 17 handle trade for us. So as annoying as the first 8 were, first thing in the morning, the volatility cuts both ways is my point. Be ready to deal with it in either direction. And if you want to, if you want to learn how to do that stuff, if you want to navigate what is a pretty rocky market at times, we would love to help you, help you do that. Trading this stuff in a vacuum is no fun. No fun, and it can be pretty dangerous. All right, everybody have a fantastic day. We'll be out with some more stuff on social. Check all that out. I will talk to you then, and until then, trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.